Hey, kings and queens. How y'all doing? How y'all doing? Hey, kings and queens. Good morning, good morning, good morning. It's Sandra Fenwick here, your mortgage consultant. Just come on in. I wanted to quickly do a live about tomorrow's Fed's meeting. It's a lot going on. I'm here at the office, at the mortgage expert's office. And while I wait for our meeting to start, messing this up, I wanted to go live and talk to you guys about the upcoming Fed's meeting. So y'all come on in, come on in. I've already done a live on TikTok. I don't really like TikTok, y'all. Y'all are my people here on Facebook. These are my people. So I wanted to do it here and give you guys a quick update. This is going to be a quick live, so don't think I'm going to hold you here for a long time. I made some notes and talking points so I can make this as quickly as possible and I don't miss anything. So if it looks like I'm reading, I am. Y'all know I'll be all over the place. I start talking about stuff that I don't need to be talking about. So I said, let me come prepared today. What's going on with this? This one thing is going rogue on me. But I said, let me come prepared and let me give y'all the tea. The tea. Big Fed meeting tomorrow. And everyone's asking, what's this gonna mean for the mortgage rates? Let's break it down in plain English because what the Fed does tomorrow could directly affect or impact your buying power. So the Fed's meeting tomorrow. They're meeting tomorrow on September the 12th, and they are forecasted to lower the federal interest rate. And I'll get into what that means, and then I'll give you a quick synopsis at the end. All right, what's happening tomorrow? The Federal Reserve meets to decide on interest rates. Right now, most experts expect a 0.25 rate cut. That's the Feds trying to balance slow job growth and a sticky inflation era. So tomorrow they're going to meet. We are forecasting, or not me, they are forecasting that the rates are going to be cut a quarter point. What does that mean? If the Fed rate right now is 5.5, it's going to go down to 5.25. So that could be a huge cut and a huge break. So what does this matter to you? Here's the key. The Fed doesn't set mortgage rates directly. They set the short-term Fed fund rate, which influences overall borrowing costs in the economy. Mortgage rates move with a 10% yield, treasury yield, and those are heavily influenced by how investors react to the Fed, to what the Fed says and does tomorrow. So the Fed rate cut, the federal rate affects the overall interest rate for people to get money. So the people you borrow money from, they borrow money from the federal government. And to make their businesses flow, they adjust the interest rates to follow the federal interest rate. Because if they've borrowed $1 billion from the federal government, they got to pay that back at an interest rate, right? And so now when they loan the money to you, they have to recoup the money that they're paying and actually make a profit. So that's what that means. So that's how the federal rate works. So if the feds cut their rate, then the big people that we're borrowing money from, they get their rates cut, their interest rate goes down, their payments go down, then they can pass that savings on to us. They could. So it also depends on not just what the federal rate is, but also what the economy is doing. So we'll get into that. I don't want to go too far ahead of myself. What we'll be watching for tomorrow? Number one, do they cut rates to a quarter point as expected? Number two, the press conference. What Mr. Jerome Powell says about future cuts is more important than the cut itself. So last year around this time, Mr. Powell said it wouldn't be advantageous for our country to cut interest rates because we need the interest rates to stay where they are to keep the economy afloat. So this year, he's saying, he thinks the rates should be cut. The administration thinks the rates should be cut because we need that to help boost the economy in a way. Number three, inflation. If the Feds hint that inflation is still too hot, mortgage rates could stay sticky. If they say it's cooling, we could see some relief. So if they say the inflation is still too hot, we need to keep them rates up because we need this money to keep coming in to keep the economy going, then the interest rates can stay where they are, or they can potentially get a little bit higher. If they say, okay, inflation is kind of under control, we need to cut these interest rates to make borrowing possible for other people, for everybody, then, the interest rates will start to trickle down. Number 4, what this could mean for mortgage interest rates. That's what we're here for, guys. This is where I'm coming in at. If the Feds cut, we could see mortgage rates drift a little lower, especially since they've already been trending down over the past couple weeks. And I tell you guys all the time that we're alerted during the day when the interest rates going down, if they went up. We have several investors that we work with, and some of them send us emails. Hey, the rates dropped. The rates got higher. So interest rates change every single day, and sometimes 2, 3, 4 times a day. So when those interest rates happen, then sometimes we get notified. So what I've seen over the last 3 weeks is every day I've been getting alerts saying the rates are going down. So I expect them to continue on that trend. So they've already been on a downtrend, so we expect them to keep going down. But don't expect an overall crash in rates or an overnight crash in rates. A lot of this move is already priced by the market. So a lot of investors, especially on the mortgage side, had already started adjusting their interest rate in anticipation to what they think the Feds are going to do. So sometimes right after tomorrow's meeting, depending on what the Feds actually do, the rates can continue to go down, or the investors will start to adjust what they've already done to be on line with the actual federal government. Think small, steady moves rather than big swings, right? So if you bought your house last year before, then you already have a high interest rate. Right now, the interest rate is probably lower than what you have. So it's always advantageous for you to reach out to me or another lender, do a mortgage checkup to see how much money you can save, especially in this economy, because a lot of people have been using credit cards to survive. They've been taking out personal loans. So if you have this home that has equity in it, it might be a lower interest rate, and it might be time to consolidate some debt that you've accumulated over the last 2 to 3 years because of what the inflation and what the economy has been. So think small, steady moves. Think about even if you get a 0.5% rate cut, that could save you thousands of dollars. So think small, steady moves. Last but not least, the last point I'm going to go into is what this means, and if you're thinking about buying and refinancing. If you're house hunting, slightly lower rates can improve the affordability, but remember, timing the market is perfectly timing the market perfectly is impossible. I was going to say it's perfectly imperfect. So the market, listen, again, it changes every day, sometimes several times a day. So timing the market, you really need to look at these things. You really need to watch what the Feds are doing. You need to watch what the S&P 500 is doing, what the Treasury yield is doing, because that will tell you what the trend looks like. Look at when they come out with the job reports and they come out with the inflation numbers, look at what that's doing, because that is what affects what the interest rates are going to be. So if things are looking up, things are getting better, things are trending upward, then it's likely that the interest rates are going to go down. Do not let what the interest rates are, regardless, stop you from buying a house. I know we need it to be affordable, but you just buy something that you could afford based upon what the interest rate is today. Because any piece of real estate that you buy in the DMV area is going to make you money in the long run. Most, I shouldn't say any, because I'm trying to guarantee something that may not be possible. It depends on a whole lot of things. But in most cases, People are making money off of real estate. People are gaining equity. So even those people who said, forget it, I want a house, I want it now, and they bought at a 6.75 interest rate 3 years ago, they now are sitting on $75,000 to $100,000 in equity because they didn't let the interest rate stop them and scare them from buying. So that's my piece of tidbit of advice, regardless of what happens. But if you are one of those people that were waiting and said, I'm just going to wait until the interest rates go down, tomorrow's meeting could help you make a better decision or a more informed decision on where it's going. And then when you get pre-approved, most of the time your rate is not locked in. We're quoting you the rate for that particular day. So by the time you find a house and we lock you in on your interest rate, then your interest rate could go down. But if tomorrow's meeting forecasts that the rates are going to continually decline, then I say go ahead and get pre-approved and let's go ahead and get you a house now. Right? Closing argument, closing or call to action. Tomorrow's Fed decision is one of the biggest market moves of the year. I'll be watching it closely and I'll share updates right here as soon as I know more. Right? So after tomorrow's meeting, maybe after tomorrow's meeting or early next week, I'll come back on and do a live and let you know what the market is looking like. They say wait at least like a week after this meeting to see what the trend is on the interest rates. So keep an eye out for my updates and I'll let you guys know what's happening in the market. You want to follow me? Turn on your notifications, subscribe. I'll be on all of my platforms, either here, TikTok, YouTube. SandraSpeaks.com is my YouTube channel. Subscribe to that. Turn on your notifications because I'm going to be giving you guys updates on the economy. So tomorrow, it all depends on what the rate cut is going to be, what the inflation rates are looking like, what the job market is looking like. How many jobs have been created? How many people are laid off? So these investors are looking at the rate cut, not only the rate cut, because that's important to them too, but they're looking at what the market looks like right now. If the market still looks like people can't afford anything, you know, people might borrow money and not pay it back. People are still losing their job at a huge rate. Then they might say, oh, I'm gonna keep my interest rates right here to make sure I get a proper return on my investment. So tomorrow's meeting is extremely important. Keeping up on market trends is extremely important. But if you guys have questions about what's going on, please give me a call. You have my cell phone, 301-965-1155. Feel free to comment on any video that I post or inbox me on any of my social media platforms. I am here to help keep our community informed and up to date. All right, guys, thank you for watching. I will see you soon. Bye.